In this video, I want to talk about the daily wicks and how they look throughout the day. So to do that, what I've got here is a horizontal line um, at 5 o'clock, which is the start of the Forex trading day. And in between the day, I've got the daily open. And just want to confirm here, yes. Okay, so I've got the open is the green arrows pointing to the right. The high for the day is the red triangles pointing to the right, and the low for the day is the green triangle pointing to the right. And the close is the um, the brown squares um, going left to right. So, and I'm just going to start at the most recent day. And so we could see in the most recent day, we had, these are all 60-minute, 1 hour bars. So we can see that once we opened the day and we put in the lows, um, and then from there we moved up. We broke at the 2 o'clock bar, we broke above the open, and 3 o'clock bar, which is the start of the London session. We come back and test the open, and from there we take off from the open and move pretty sharply all the way up where we put in the high. Um, and then the high was put in at 12 o'clock in the day, and then after that we had um, 4 hours of trading um, above where it ended up closing for the day. So we could see the majority of the move, the smooth part of the move here, and that's really what I want to get into, happened between the open and the close. Similarly, the previous day, um, we opened here and then we move up. We oscillated a little bit on the open. We went up and we put the high in at 4 o'clock, 5 o'clock in the morning, um, and then we moved sharply down from 5 o'clock right down to 8 o'clock in the morning, and that's where we put. So 5 o'clock we put in the high, and then 8 o'clock we put in the low. But what I want to talk about is between the open and the close is where we had the smoothest one directional move. So um, the thing is the high and the low and the close are dynamic. They can change throughout the day. But what cannot change is the open. And so I think the value is in studying the open and then watching which way it moves away from smoothly, sharply, and in one direction. And then that will usually tell you that either the high or the low have been set. Now we're waiting for the opposite and the close um, to be determined. So in the most recent day here, we can see that once 3 o'clock in the morning happened and we moved up, 2 o'clock we moved up, 3 o'clock we went higher up, and we broke on the other side of the open, then we start to see that potentially we're looking at a change right here in or not a change, but we now have we have this high from the previous day, we have this high from 3 o'clock, and then when we break above that, or better yet, we have these lows here and we can't go below them, and then when we break above the open for the day, um, we can start to feel now that we're now putting in new highs for the day, and the highs will now be dynamic, and it looks like the lows will be fixed. Now, I'm not bringing in any of the tools here right now, but I think we use our other tools and we can start to get feel confident in trading in the direction once a side of the open has been chosen. So in today's case, um, the side of the open was to the to be above the open, whereas Friday the the selection was to be below the open. Um, and now uh, that's why I like watching this 3 o'clock London Open. Now there was a little bit of misdirection on the 3 o'clock on London Open because we moved up, and then one would think that okay, we've now chosen our side and we're going up, but therefore stops to be down here. And if stops come down here and get hit, then we now know that the high is put in place, and then look for this thing to keep going. And there are other tools I could use to see the momentum for the day, and but that's not what this video is about. Um, Going back to Thursday's trading of last week, um, again, we opened the day right here at 113,415, and then for the first um, one, one, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Well, let's go back to 11. For the first 11 hours, we were trading above the open, and the 3 a.m. bar takes us below the open. Now, it doesn't close down there, but it closes down, and then the following bars start to come back to it, and we one time framed all the way down into the low of the day. Similarly, we one time framed on Friday from the high all the way to the low. We didn't exactly one time frame, but the majority of the bars were putting in new highs and lower lows. The previous bar's low is not being taken out. So on Thursday, we once it chose which side, it stayed on that side, and um, we could see that once this started to happen here, the thought process had to have been the price was going to come down to this low here, which it did. And then once you get into this late in the day and you start to head down to the downside, it's almost rarely will you see a V-like shape right back up to the high. And if it does do that, very rarely it will break the high there. Now this day here, it was equal on the on both sides. We really didn't take off much. Let's see here. No, it's wrong. Over here, the lows was right on the first hour of trading, and from that, it chose what side I wanted to be on, and it moved up. But what we saw in here, and this is just using a little bit of common sense, we saw the entire pit session, the RTH session. Uh, Indecision, really. And so when you see indecision, once it breaks on which side it wants to go to, it usually will go that way for a pretty strong move, and we can see that it started on Thursday with a little bit of pullback into the open of Friday, and then a sharp drop on Friday. Um, going back here now into this day here, we open right here, and we open up here on the green arrows to the right, and we um, we move sharply from it. And here's that V pattern that we've seen, that we talked about. Not that we've seen, but it's very rarely do you get this V pattern so nice and clean like that. And if you get that, and it does like it did here, it breaks above it, then look for it to continue. If it does not break and it just comes up for a double top V pattern, then the expectation after that would be to look for it to come not only back down to where it started from, but beyond. But in this case, it went up and above it, and it closed above it. So then you just look for that pullback um, to get in, and that's exactly what this is. So we have this big strong up bar um, that does not get retraced. We just have a little bit that you can see the smoothness of the move was in between one of the extremes uh, it was in between the open and one of the extremes. So here we go from the open we drop pretty sharply, and then we go right back up. And over again, almost every day here we can see that the smoothness of the one direction of the move happens in between the open and the close. Above the the uh, um, the wicks on the other side of the close and the wicks on the other side of the open, um, a lot of times those are misdirection, and they should be they should be studied very carefully for the clues that's being given inside of them for the direction for the next day. So I think the point that I'm trying to I see here is study the open. The open can be a great reference, and once it chooses the side of the open it wants to be on, um, then look for it to run in that way. I don't want to carry this video on, but I'm just gonna scroll back at some random date here and look at that what I just said. So here we go. We open right here, and then we chose the side. It wanted to trade above it. Then it comes back down and it tests the open, and so we have a nice smooth move above the open, and then we come back to it. And notice the come back to it. It's not a come back to it and go beyond, which if it did, this would have been a smooth drop ride down. But instead, it came back to it and had a smooth ride up um, to what eventually was the close for the day. So again, the smoothness of the move was in between the open and the close. Similarly over here, the smoothness of the move, the one direction part, was between the open and the close, and there was a lot of misdirection in between on the other side of the open and here on the other side of the close. Um, Similarly here, again the smoothness of the move was between the open and the close. Here the smoothness of the move was we went above it, we come back down below it, and we almost close. When we see we get back up it, we break through the open, and then we come back and we test the open. And you're not going to see this run up that way, and it may run up that way, but it's not going to happen on the same day. So what I've got to do here is I've got to learn to wait for the next day to get the move, and that's why when you let me just do this. That's why when you bring in the daily bars, this is what they look like, right? So you have this sharp move up, but then the next day you retrace. You're not going to get this if you hit this high here and you were lucky and you shorted up here. Don't expect it in that same day that you get in to run all the way back down. You got to look for the next day to get that. Similarly here, um, on the Friday, you get in here on the short. You got to get out close to that close because it's now, unless you're really going to hold for a longer term, but chances are is that you're going to get some kind of a retrace like that. Now that was a pretty deep retrace today, but this is what happens all the time when you look at the daily bar. You see up and then down and then up and then down and then back up, and then you a 2 day balance, and then you move up, um, and the smoothness of these moves occur uh, between the open and the close, and the misdirection is in the wicks. And again, we could play this out. Just choose another random date here. Again, the smoothness of the move is from the open to the close. Now, like I said, we don't know where the close will be, but we definitely know where the open is. That's fixed. The close is dynamic. It could change at any moment. Um, and it happens at right at the close of the day, and so we don't know where that's going to end up. But it's relevant in terms of the close because the close becomes the open for the next day. So they can be studied together like that, unless you have a gap up like they did here, which is a little bit different. It's just a Friday to a Monday open. And just to finish up this video again, look at this. The smoothness of the move is between the open and the close. And again, we don't know where the close will be, but we know where the open will be. And when we see that, when we see this kind of behavior happening here, we start to move down. Then we're looking. We could draw these trend lines like this in here, and then we could look to see is price coming back to the open. And if it's not, if you're trading short, you got to. Sorry, if you're trading long, you got to get out. But ideally, what you want to do is to see that and be trading short there. Similarly here, if you see this and you come up and you break the highs from the open, the early open, then you got any kind of shorts that you were having in here, hard stops have to go up here, and then you can see the smoothness of the move um, is from the open to the to the to the close. Actually, this one is not true. This is the it's here. So this is one of those where we were wrong, but here's where the next day comes in. And again, if you start to see balancing like this, whichever way it breaks, it could have broken down to the bottom and then it would have been a smooth move down like that. So that's using a little bit of common sense on that one. So you always got to look for these days where uh, you would expect the misdirection to be in the wicks, but if you start to get the misdirection in the body, then look for it to consolidate and then look for a breakout outside of that consolidation. And just one last one um, here. You can see we're having misdirection between the not much happening between the open and the close here. Not much happening between the open and the close. Not much happening between the open and the close on 3 consecutive days. And eventually, when we break out of this range, it was a sharp break without looking back. And that's a nice, let's take that from low to, that's a good 900 pip um, break outside of that. And that's why for 3 days, you got to study that. So I think there's incredible value in studying the open, um, the open to the close, and then study the misdirection between the close and the other side, and the open and the opposite side. But in between the open and the close, there should be a lot of some easy, smooth moves in there. Stop and leave it at that.